I'm interested to hear your kind of thoughts. How's the American property market looking at the moment, especially with low rates? I mean, here in Australia, we're certainly seeing kind of all-time highs, low rates. Is it much the same in America?
It's the exact same. We have
Right.
the perfect storm in the housing market where housing prices have hit record highs. They're growing at record rates. You have massive demand of people wanting to buy homes and not that much supply. Now, it's starting to slow down. It's definitely slowing down where you have kind of things cooling off, but home prices are still growing very fast. Now, does that mean that you should just completely avoid it as an investor? No, it means you got to understand what's going on. I took a break from real estate when the 2020 pandemic happened because there was just so much uncertainty. I had no idea what the heck was going on. So I gave it a decent amount of time into 2021, I think, where I just stopped. And I was like, let's see what happens. Because we had in America, we had so many new regulations coming out on evictions and foreclosures and then mortgages. There was just so much going on. So that's where I put things on hold to kind of see what was going on. Then in 2021, we saw, soaring real estate prices, but I also got back into buying real estate. The difference now is I am being way pickier now than before.
Right.
Where, I understand that, hey, real estate prices could come down. And if that's the case, I want to make sure that my property is well suited where, let's just say the whole economy slows down. If I have to lower my rents, then I'm going to be okay. So I'm trying to factor that in because there are properties out there, especially your commercial multifamily apartment complexes, that are being sold at valuations which make no sense. They're selling properties not based off of how much profit they're making today, but based off of how much profit they think they'll make in 2 or 3 years based off of 5 to 10% rent growth. So what they're saying is, we're making a little bit of profit this year, but we think that rents are going to grow by 5% next year, and then another 5 to 10% the year after that, and then another 5 to 10% a year after that. And based off of how much profit you're going to make in 3 years from now, we're going to sell this property today. I'm not doing that.
Right. Yeah.
I'm not getting emotional. I'm not trying to chase these properties. It's harder because now I gotta sift through a lot of deals. I gotta spend more time finding the right deal, but I'm not going to chase these properties, but I'm still going to buy because if, let's just say there is going to be we know there's going to be a correction. Every asset class, stocks, real estate, cryptocurrency goes up and down, right? It's a fact. It's happened for centuries. Now the question is when. I don't know if it's going to happen next year or in 10 years. I mean, I obviously have my own guesses, but I have no idea. And so I'm not going to sit here and just wait. I'm going to buy, be smart when I buy, and then if and when things go down, I will buy more aggressively.
And a lot of people, I guess myself included, are looking at getting into property over the next little while. And I think you bring up, obviously, a very good tip is to be picky and don't, obviously no one's forcing your hand into a deal, so don't go into a deal if it's not going to be something that's really good. And I think we're seeing kind of that same situation in the stock market as well. It's hard to find great opportunities at the moment. Are there any other tips or maybe do's and don'ts of property that maybe you have learned over the years for people that might be interested in getting into it?
I mean, there's so much. I mean, it's talking about years of experience and mistakes.
Yeah. Are there any that stand out?
The first thing is you got to decide what business do you want to be in. Do you want to be in the real estate investment business or the management business? And this is something that a lot of newer real estate investors have a hard time getting their head around because let's just say you buy a property, we'll talk about a single family home, and you rent it out for $1,500 a month. Well, now you have a question to ask. Do you want to manage the property yourself? Or do you want to hire a property management company who is going to take somewhere between 6 to 10% of your gross rental income, so up to $150 a month, to now manage the property? And you might say, oh, it's just one property. It's not that much work. The tenant's just going to pay rent. I just got to pay the taxes and the bills. Well, it's not a big deal. Well, for me, I don't want to be in the management business. I want to be in the ownership and the investment business so I have my time so I can find more investment properties. So, that's where you got to decide is what side of the business do you want to be on? I don't want to be getting calls from my tenants saying, oh, my toilet's broken or, oh, the furnace isn't working. I want them to call my property management company who is then going to find the contractor and do that. I want to just review it and manage it to make sure that, everything is running efficiently and make sure my management company is doing a good job and making sure the tenants are taken care of. But I don't want to be the person that's paying the bills. I don't want to do that day-to-day stuff.
And I guess the last thing I wanted to touch on, so we've spoken about property a fair bit. Last thing I wanted to touch on as well, and this is something that is related to property, is inflation. Because I'm very much an outsider looking in, because obviously I live in Australia, but I've been following what's been going on with inflation over in the States, and this is leading to, asset prices going through the roof. Obviously stocks, real estate, record low interest rates. How are you kind of seeing inflation at the moment? I see that you've made a fair few videos on the topic of inflation and whether it's kind of transitory or whether it's kind of here to stay. How does inflation factor into what the investor should be thinking about, whether it's the stock market, whether it's real estate? Are there any things that you're thinking about in that area?
So inflation is when the value of a dollar goes down, which causes the price of things to go up. The easiest way to understand this is you go back to our grandparents' generation. A can of Coke today costs maybe 20 times more than what a can of Coke costed a few decades ago. And are you getting 20 times more value for your can of Coke today than 20 years ago? No. The reason why that Coke is costing more money is because the value of a dollar has gone down. So inflation is caused through the dilution of the value of a dollar, which means that when the Federal Reserve Bank prints more money, more dollars are in economic circulation, which means each dollar is now ultimately worth a little bit less. Between 1913 and 2021, the United States dollar has lost about 96% of its buying power.
Wow.
Which direction is this going? It's going to continue going in that direction because we keep printing more money. We saw, a historic record amount of money printing in 2020 and 2021. Between 2020 and 2021, we printed pretty much right around 40% of all dollars out there in just 18 months.
It's insane.
So inflation is not going to go away. And we haven't really seen the full effects of inflation. But then on the flip side, you also have the supply chain issues. Because if you look around the world, it is very difficult to produce goods. It's very hard to produce products. Manufacturing plants are still not running at full capacity. Companies, at least in the United States, are having a tough time finding labor. You have cargo ship backups around the world, and that's why we just recently in the United States announced that we're going to open up ports 24 hours a day to allow for more ports to come in. I mean, if you go to different stores around the country, the shelves are empty. I mean, it's so hard to buy a car right now. It's so hard to build a home right now. It is so hard to really do a lot of things because part of supply chain and part of inflation. Now, how much of it is, it's impossible to say which one is the real cause of it. The Federal Reserve Bank and the government are going to continue saying that the money printing is not that bad. It's just transitory. But the facts are, I mean, that's not true. They're lying to you when they say that. Anytime you print money, especially that much money, you're going to feel the effects of it. Yeah. Now, obviously, we do have real supply chain issues. And I do think that as the supply chain gets figured out, what we'll probably see is we're going to have a excess surplus of goods.
Right.
When you have an excess surplus of goods, that can completely shift the market and kind of push the prices of things down. But, it's just kind of like, it's like any asset class. A market goes up, it gets overheated, it sells, people panic, it sells, and then it gets oversold, and then it kind of stabilizes, right? So there's a good chance that we could see something like that, and then we're going to see the real effects of inflation. Because then all these new dollars that were printed in 2020 and 2021 will finally start to be really absorbed in the economic system, and then people will start to see what the real value of the dollars are. So, inflation is a real thing. It is a real concern. And we will really start to see the effects of this over the next couple of years. Everything that we're seeing right now with the growing prices is not just inflation. It's supply chain issues as well. But inflation is a real concern, and we have to really start thinking about that. Thank you for watching. If you enjoyed this video, here's a video on investments that you need to own for life. And while you're at it, download our free guide on how to start generating passive income. And as always, keep hustling. If you still believe in the long-term value of this company, you're just not happy with the price, then you are switching sides. That's why you got to start by understanding your goal and knowing what your strategy is, because if you're investing for the long term, then you got to understand market crashes are a part of the game.